Hi everyone, let's look at my high time frame and low time frame scenario, starting with the more bearish high time frame scenario where we're looking for this to be a 1, 2, 3, 4 and then a wave 5 to the upside, where still an interesting target is going to be the 2022 range highs for maybe a bit of a liquidity grab before then a corrective structure to the downside. If we look at this scenario, rightly so, John Howard and IDFK in Discord mentioned that this wave 3 can't be over here, which I showed in my previous video, and actually I put it in my comments right after posting the video where I said, wait a minute, wave 3 can't be here, it has to be up here. And the reason was that if you put wave 3 over here, and this is an expanding flat correction in a wave 4, that is extremely rare. It's very common. An expanding flat is actually the most common correction in a normal impulsive structure, where then the wave 4 is going to be an expanding flat. But in a diagonal, the zigzags are the ones you want to look for, a zigzag in a wave 2 and a zigzag in a wave 4. So therefore the high of wave 3 is then moved up here, where this impulsive structure is a little bit weird because you have to count it some sort like a 1, 2, 3, 4 and then this being a 5. So it's not the cleanest, but in this scenario it still works, where wave 3, the high has been made at the 0.886 trend-based fib extension target, which is fine as well because wave 3 is still shorter than wave 1. Make sure it's log scale and also the fibs are on log scale when you work on the higher time frames. And then in this move to the downside, this wave 4, we're looking then for a zigzag structure, which is a 3-wave impulse. So it's basically a wave A, it's an impulse, sorry, it's a 3-wave structure, but it's then a 5-wave move down, 3-wave correction, and then a 5-wave move down, where the target area for this wave 4 is basically, well, below this low, I can imagine, because we have to wait and see how far this wave A is going to be for then a wave B and then a wave C. But as it stands now, what I think would be nice is to grab the liquidity of these lows over here for maybe then a reversal to the upside and then eventually another move to the downside, where for me this target area over here, where you can see the white box, is very interesting, which is basically between 24k and 25.3k, or 24.2k and 25.3k, because we then have this over here as a support resistance flip. So there was resistance over here, which can then turn into support. We have a daily order block and we have other confluences in this area as well, as my yellow target box over here is showing. And those confluences are between 24.3k and 24.9k. So it's an interesting area for support, in my opinion, where also we have one of the more common targets for a wave 4 in a diagonal, which is the 0.5, currently sitting at 24.6k. So this area over here is very interesting for a potential support area, where then the potential trading setup, educational, is to ladder the longs in this area over here, stop loss somewhere safe or below for then a trade to the upside, where my main target at that moment in time, of course, depending how everything is going to form, is going to be around the 2022 range highs, which is 32.4k. If you then look at another scenario I do like to show you, which is then the very bullish scenario, it's a little bit different, of course, because now wave 1 is over here. So this structure is still the same. It's a 1, 2, but then instead of this being a 3, 4, 5 and then looking for a reversal, we're looking for a lot more upside. Volume wise, it's not the greatest scenario. I'll go into that in a second. So what we're looking for over here is then this to be a wave 1 and then some sort of a 5-wave structure in this lower time frame count. For this then to be a wave A, 3-wave B and then a wave C. Now this wave B retraced to the 1.618 Fibonacci, which is then actually taken from the high of wave 1 to then the low of this wave A. The pivots that I choose, of course, you can choose some different ones, but in this particular scenario, we choose these, put them on log scale, they already are, and if I then move these to the right, you can see that the 1.618 is very, very nicely respected. No daily candle closed above the 1.618, which is exactly actually what you want to see on the higher time frame, for then potentially this to be a wave B for the rare target, then hitting the 1.618, and now a move C to the downside. So this is going to be interesting, because if this is a wave C, you want to see it move down consistently. You don't want to see the other structure like with the other scenario, where this is going to be a 3-wave structure. You want this to be an impulsive 5-wave move to the downside. So if we get a full impulse to the downside, this scenario might become more likely. But if this is going to be a 3-wave structure, then the more let's say, well, the other scenario becomes more likely, right, that I've just shown. If we then look at the volume, what I don't necessarily like too much just yet is that the volume is going down as price is moving to the upside. You can see volume going down, down, down. Even though price is making higher highs, volume is making lower highs, which supports this scenario a lot more, because in a diagonal, you actually want to see volume going down the longer the diagonal is taking place. So volume going down, 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 while the scenario, the diagonal, is going up, up, up. That's exactly what you want to see in this particular scenario, but not something you like to see if this is eventually going to be part of a bigger wave 3. Maybe, of course, in this scenario, then after wave C is finished, you get that big impulse to the upside, but as it stands now, it's not my favorite scenario, but more like an alternative. Also, because if we look at the target area for a wave C, in combination with the target area for a wave 2, if this is then a 1-2, the most common targets area for a wave 2 are between the 0.786 and the 0.5 pip, which is between 23.8k and 21.3k. While if this is a corrective structure ABC in a wave 2, which actually is a little bit more rare, usually a wave 2 is a zigzag, or at least more commonly, I should say, but an expanding flat can still work in a wave 2. But then the target for this wave C, the maximum target usually is this 1.618 over here. And as you can see, it is above the common targets for a wave 2. It is, however, still touching the rare target for wave 2, which is the 382. And in a very bullish environment, the 382 can act quite often actually as support in a potential wave 2 for then a move to the upside. But nonetheless, the 382 for wave 2 is still a rare target in general. Even though the 1.618 over here for a wave C is still a common target. So yeah, we have to wait and see what price is going to do. Is it going to go down directly, or are we going to see some sort of a shape to the downside? So these two scenarios are, of course, then for price continuing to the downside in whatever structure that may be. If we then move towards the lower time frame and we look at the bearish scenario, we're looking at that impulse to the downside. So first, to show you the 4 hour, by the way, you can see that volume is increasing over here. So the average volume happening over here during these candles is definitely higher than everything we had on average before. So volume is increasing in this particular scenario to the downside, where if we look at this scenario, we're looking at a 1-2-1-2, and we're currently in a wave 3. So we have a blue 1-2, then a yellow 1-2 for then a bigger 3 to the downside, and eventually you get like a 3-4, 3-4, a 3-4-5, and then another 4-5 to the downside basically. And in this particular scenario, the minimum target for this wave 3, definitely, if this is a 1-2-1-2, you want to see the wave 3 at least hit the 1.618, which it has done, as you can see, so that is very nice. However, wave 3 can be extended much further. And what I like to see to confirm this wave 3 is some sort of a range, because this wave 2 in yellow, this yellow wave 2 over here, was short and deep. And with deep, I mean it retraced very, very high to the 886 compared to the high of this wave 2 for then another 1-2 over here. So a very high retracement of a wave 2, and it was a zigzag, which is also called a more simple correction, which is common for a wave 2. And then we have wave 3 to the downside, and because of the rule of alternation in Elliott waves, if wave 2 is quite short in time and deep, wave 4 tends to be long and shallow. So this is what I am basically waiting for. In my opinion, these corrective structures that we had over here, a little bit sideways, again at the moment, a little bit sideways, is not yet confirming me, or enough confirming me, that wave 3 is already in. I definitely want to see a bit of a longer range before then eventually continuation to the downside. And because the weekend is coming up, it can be interesting for this potential wave 4. So maybe the low of 3 is already in, or maybe we make another low and then we're going to start ranging throughout the weekend for this potential wave 4, where we're basically making a range, and then on Monday we can sweep the highs of the range and then eventually move to the downside again for then the wave 5 in yellow, which finishes the wave 3 in blue, for then a wave 4 in blue and a wave 5 in blue to the downside. So in this particular scenario, we are expecting downside, where definitely the invalidation is all the way up here, which of course is quite a stretch because it's at 30.4k and currently we are at 28k. But hey, you never know what happens. I do want to quickly show the unlikely scenarios. So these are unlikely, but I've shown these in previous video and I want to show them why I don't like them anymore. We had a WXY over here with then in wave Y, we were looking for a zigzag structure, basically a 5-3-5. But because this potential then first move already retraced so incredibly deep below the 1.236, it's very unlikely this is still a valid scenario. And we had the expanding diagonal, and the reason this is not my favorite is, first of all, expanding diagonals are rare. Also, volume is increasing, and usually in diagonals you like to see volume decreasing. Now, of course, it's an expanding one, which means that the waves are becoming longer and longer and longer, which therefore can mean volume is increasing, but at least something to take into account that, yeah, volume is increasing, but usually in diagonals it's more like decreasing, or at least maybe stable. We are currently in a wave 5 target area in this scenario, but as you can see, it is below the trend line taken from wave 1 to wave 3, which, I don't know, like currently we're basically finding resistance over here. And if we go to the lower time frames, the 5 minutes, you can see that we went up over here in 3 waves. And I mentioned also during the update earlier today where, yeah, this is 3 waves, which, you know, you don't really want to see unless it's like a leading diagonal, but now we retrace so deep here already that a diagonal for maybe a 1, 2 and then impulsive 3 to the upside becomes very unlikely. So this looks very corrective for maybe more lower prices to come. And also we had some bearish divergences again. So we had a high over here, made a lower high on price, higher high on the CVD, and that happened once more over here, lower high but a higher high on the CVD. Both of these bearish divergences already played out. And if I quickly have a look at potentially bullish divergences, there is no bullish divergences in yellow, no bullish divergences here on the blue one as well. So yeah, we do have bearish divergences that have played out, but no bullish divergences at the moment on the 5 minute very, very low time frame priced action over there. So if price will go through the target box that I have over here, which also then includes going through the higher time frame supports that I had over here, so a range point of control of the bigger range we had, as well as the weekly naked point of control, and we also had a daily naked point of control. In case this is not enough and price goes to the downside, I do want to tell you that we do have some liquidity over here because of a couple of lows, so we might wick below, take the liquidity of these lows, and then move to the upside in a potential wave 4. Or for me then the next target, if we don't have this very quick bounce to the upside, a potential next target is the target box down here between 27,162 and 26.9k, where you can also see a daily naked point of control in this target area. But there's a couple of more things like another range of point of control and the daily as well. So it is an interesting area of support. So that being said, I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.